Welcome aboard, everyone. Welcome back. Today, we're packing our bags and traveling to a mythical place I like to call Babylonia, the land where markets defy gravity. Prices float endlessly higher, and logic often takes a backseat to hype. History has taken us on tours through Babylonia before, as you guys remember, from the tulip mania of the 1600s to later the dot-com boom to the housing frenzy, later even the crypto mania. Each time it feels like the rules don't apply until they suddenly do. As you guys know, there is a famous quote from Milton Friedman, a well-known economist, suggesting that the stock market and the economy are two different things. This week is all about the labor market, correct? Despite the price action on the equities as well as the cryptocurrencies, we're going to be looking at two major components, three in this case, for what really matters within the true economy, okay? Applying once again the rules or the quote from Milton Friedman, suggesting that the stock market and the economy are two different things. Okay? I hope each one of you are rejuvenated after a prolonged weekend. This is Marob 6, your host. Today, September the 2nd, prior to the intersection between price and time expected for tomorrow, September the 3rd. Once again, everyone, welcome aboard to a new session of charting across the board. Grab your charting tools, your coffee, and let's dive into the TA. The chart that you guys can observe on the screen is a chart from the VIX as well as the two major indices. The major two US indices, the Nasdaq as well as the S&P, of course, resonating, moving accordingly within the cyclical rhythm. The chart in blue represent the VIX, the sentiment indicator that was previously presenting a lower level from August the 27th last week. Now, this curve line, the sun waves, once again represent the cyclical rhythm, the highs and lows. We already went over these details. However, today we're going to be looking at other major components of the true economy: inflation, unemployment rate, as well as the interest rate. Apologies, I froze it for a second. Interest rate. I was looking at the charts above to remember them. So here clearly we understand that prices are extremely high on the macro. We went over these technicals many times. How did we get here? I know this is such as beating the dead horse, but it is important to bring context where we are, where we were, and also when we speak about bubbles or blow of stops, how high can the markets go? Okay. In terms of Fibonacci retracement levels, we move from the retracements for support levels, any extensions, to potentially identify key turning points on the upper part of this bubble. Okay. There are key levels such as the 1,272 on the extension. The 2.61A is a well-known fib extension where often parabolic rises tend to terminate. And of course, the 4.23 is often known as the blow-off top. That seems to be a significant move if we navigate into the extensions to go and portray those technicals. That would imply a higher level. However, let's bring once again context as to where we are in the price action before looking at the data set on the inflation rate, unemployment rate, as well as the inflation rate once again. All right, here parabolic rises, early identification stages using a chart on Bitcoin. Why Bitcoin? Because it is a proxy for risk on. Okay. Starting on October 3rd, 2022, pretty much at the early stages of parabolic rises, the early formation of a bubble here, you guys can connect the dots in green, suggesting an upward move to where? To the extensions. Now, clearly, we have exceeded these levels on Bitcoin, and now it's time to see the extensions. These two represent the 1.13 as well as the 1.272, applying or anchoring the extensions from the highs to the lows. In a similar manner for the S&P 500, you guys already are familiar with this chart over and over. However, nothing has changed since we have made this projection on both instruments, the S&P as well as Bitcoin. Here, a reciprocal early formation, potentially a continuation of a bubble that was already in the cards. Now, it's important to me to distinguish between the melt-up colors that was also brought into the sphere in late 2021, prior to the market crash of 2022. Okay? In a similar context, also the blow off top seems to be out of the radar now, being postponed or adjusting the levels, which is fine. However, we haven't made any significant changes since our projections on 2022. So now, before or besides looking at these major projections, the S&P, okay, on 2022, as well as Bitcoin from the major bubble, early identification stages potentially for a bubble, okay? Now, if we look at the charts that really matter, understanding that the economy and the stock market are two different things, where are we now currently within the unemployment rate? This week is going to be all about the unemployment rate or the labor force, okay? Here a chart once again from July 2023. We have the spike, major unemployment levels in 2020 prior to the major decline and a potential cycle low. Now, the current information after that major spike took us back to a level or a reading within unemployment for 3.6%. And currently, I believe we are at 4.7, if I recall correctly. Now, this is a chart from April this year, applying the same manner, cyclical rhythm. Where are we within this chart, within the unemployment rate at the cycle lows? Keep in mind that these levels on the upper part of these sun waves doesn't represent the range, in this case, in terms of percentages. However, if you apply Fibonacci retracement from the lows or from the highs to the lows, we have once again common areas of retracement at the 0.382, sitting at 7.75%, the 0.50 and 9.1%, and the key technical level at the 0.618 for the golden mean at 10%. We have marked those levels before, back in 2010, high levels of unemployment. Are we going to experience something similar, a similar reading from those previous highs in the 1980s, 1990s, and also the 2008 prior to this major decline, and of course, preceding the major spike on 2020? Now, if the cycles are indeed being respected at the lows, there is potentially a reading that the levels in unemployment may start spiking higher. Now, if we move into the next chart, the one that is within the headlines now, the interest rate. We also did our homework. I believe we repeated this before. Since July 2023, also, we have the interest rate peaking or reaching a high between 5.25 and 5.50 before pausing up until August, September of last year, and the first rate cut took place in 2024. Now the expectations are increasing for this month. So therefore, are we going to see another decline in interest rate, where usually the indices tend to also underperform after the cuts are, or after the first reactive move, the first spike and the high, but later market participants tend to get better knowledge on what is going on within the situation before absorbing the real truth about the economy. This is not a channel about economic environment. What we do here is about the technicals. But again, it is important to follow the data sets within the range on what really matters for the true economy. Unemployment, okay? The interest rate, and also another chart, inflation. Where are we within the inflation rate? If you guys remember, previously at the highs back in 2022, we presented this W formation, a bearish butterfly that was indeed going to take us to where? To the key technical level from the lows to the highs within the 0.618. Okay? We revisited this chart early this year, or last month, 2 months ago in July, where we noticed a divergence. Okay? Lower levels in the inflation rate, and also higher lows, lower lows in the inflation rate, as well as higher lows within the RSI. Class A, positive divergence. Are we going to see another spike, which we have already, currently 2.7%, I believe, with the current data points? And are we going to experience another retest of those previous highs? If that were to be the case, let's jump very briefly now into Bitcoin. Why Bitcoin? As I said before, Bitcoin is a proxy for risk on asset. Currently, we're seeing a spike on BTC after the decline also previously presented from this potential type 2 return of this W formation. Okay, we have the first reactive move, the correction back to the highs, as well as we explain that connecting the data points for this pattern, we may perceive a cipher or a chart that was indeed printed from where? From the highs of 124 to the lows at 108 and 107. Previously 108, the first test, reactive move, then the 0.886 for now turning into a chart, before now intersecting between the 0.382 time axis. Now, can we go any higher? Of course, that is always the case, my friend. There are other patterns in between we're looking within the room, where now we can observe potentially an early identification structure for a right angle and descending Browning wedge, known as a continuation structure. Okay, potentially an early identification structure until breaching the main resistance. Now, from where? From the highs to the lows. Okay, to where? The common areas of retracement. Now, in the previous stream, we navigated all the levels of potential declines. Okay, the first one, 108. Of course, if the key psychological level breaks at 100, we then have other levels in between. All of that was already explained in the previous two streams. Okay, so now the main level to break here for Bitcoin, now after finding some support, remains at the 0.382, the 0.50, and the key technical level at the 0.618 from 117. Can we go any higher? Can we retest the upper boundary of this early formation of a right angle and descending Browning formation at the 120 and 122? Yes, it is always possible. How probable is that argument? Only if we turn the 50% and the 0.618 as support, then we have higher arguments for that outcome to occur. Now, when it comes to bubbles, again, the topic of how high can we go, can this be the last leg of the move in the 130s? We do not know, my friends, but remember, the main argument on Bitcoin has not changed. Therefore, we stated before that as long as Bitcoin does not go any higher than the 1.41, once again, the 1.41 applying the trend-based PIB extension, this idea is still within the cards. Once again, this may be a bubble point or turning point before reversing to where the highest levels for this argument, okay, to bring once again the levels in context for this argument, this one, the CD projection, already in work or in process since early this year at the highs, then to the lows, and now currently this upward traction with some turbulences in between. However, the 1.41 we mentioned is the last level where prices may absolutely violate for this idea to be invalidated, okay? Those ranges are between the 1.13 already tested, okay? The 1.272 at 127 and the 1.41 at 136. Are we now within that last leg of the move or only another retest of the midpoint before heading lower, potentially in course or in traction of our major projection already presented many times since early this year? Okay, we first experienced a decline to the B point. Now, of course, the major puzzle that everyone is trying to solve is whether or not we're going to go much higher. So therefore, the key levels for this bubble case, in my particular case, for Bitcoin will be at these key turning points. Okay, are we near those levels, my friend? I wish I know the main answer, but from a technical standpoint, we are indeed nearing those, if not in already, at the 1.13 key technical turning points. Okay, in a similar manner, the S&P, there's no major changes from 2022, 61, 62. How high can we go? Is 7,000 now potentially a turning point? Let's move now into S&P 500 briefly, okay? Because what I do here is only a repetition what I've already been presenting throughout the years, and mainly following the major bull run at the lows. In a similar context for Bitcoin, also at the lows to the current highs, we once again exceeded expectations. Okay, so here's a clue also to present when a bubble may burst. Let's move back now into Bitcoin. Okay, why? We mentioned many times, if you guys remember our previous work from the previous room, we presented other arguments such as when a bubble may burst. And those arguments are from potentially when the curve line of this major parabolic rise start weakening. Okay, this is the same chart. Once again, this is a chart that took us all the way to current levels. Bitcoin, the projection on 2022 October, that was a turning point on equities. We then exceeded that projection, okay, these levels, the 0.80, the 0.72 and the 1.41, exceeding, okay. Now we can observe that the curve line that was previously projected for this parabolic rise, it is still within, potentially still within the range, okay. Now, an early identification also before this parabolic rise start weakening is breaking below. Of course, we can always adjust the curve line as new data points emerges constantly. But here, The key level to monitor on BTC, unless we're printing that last spike of the move before heading lower, will be to break decisively below the curve line, okay? Breaking below the curve line, mainly, I would say losing 100K will be potentially an early sign that we might head towards lower levels. In the meantime, as we know, this may take time. Why? Because the variables for this argument are based on the monthly. You guys know this chart took nearly 3 years from 2022, now approaching the 3-year window for that particular turning point. If we look here at the RSI, once again, the relative strength index, this in this agreement converging or diverging from the readings on the price action. Looking at the RSI, clearly extreme levels of the move. Here we have a lower high and a higher high in the price action, diverging, even though we may potentially still navigate towards the levels already mentioned. But again, this is the point where a bubble may, this not guarantee it may occur, only an interpretation of the market generated information that we are indeed nearing critical levels potentially before a burst. Can that be the case? Can we go much higher? It is always possible, my friend. Okay? I hope all the work that we have been presenting here throughout the years, in the previous room as well as in our new room from the past year, is something of value. We're not trying to hype or pretend that we know every single move in the market, because that's not how trading works. Our approach is always from the legends of the past that you guys are already potentially tired of listening. But again, when major readings on the macro present warning signs, in my opinion, in the same manner as the lows, okay, this is where indeed true value areas present early, prior to those major parabolic rises or a bubble, okay, in a similar context as the S&P 500. Can we go much higher? You guys already know we went over those levels, and we mentioned that the 1.13 on the S&P as well as the Nasdaq are key levels to break first, or to first break. Why? Let's revisit here briefly before ending the stream. Here, you guys already can observe that the 1.13, okay, from the highs to the lows, the 1.13 of 44.55. The projection made in 2022 was where? At 61.62. That was the first turning point before achieving the April lows on early this year. And now testing higher than 63.55 for the overspill or type 2 return of this same pattern, the ABCD reciprocal. Okay. So now that we're here, okay, slightly higher, of course, higher or complicated to make projections when it comes to the macro, but 100 points different from the main projection doesn't change much, okay? So therefore, I haven't even changed or make any higher projection than these levels yet until new variables tells me otherwise, okay? In BTC, we have been adjusting on daily patterns. We have a flag, we have sharks, among other animal patterns within the harmonic framework, adjusting properly, okay? Now, as for the S&P, so far, I haven't seen any major changes yet. We mentioned that if this is indeed a true recovery for a V-shaped recovery, we first need to break above the 1.13. The Fib extension isn't the case, we then have support levels to where? At the 0.886, basically 6,000 region. Keep in mind there is a major gap here in between at 5,000 and 700, where it is always probable to retest those gaps as support, okay? But moving objectively, we need to look for those new support levels. Resistance, pretty much since August, no major changes yet, besides the previous test at the 0.8886, also mentioned many times, for a bad pattern, now potentially within the HOP, also on the daily, for the harmonic optimal price, still within the range. Okay, now are we going to go lower, my friends? If that's the case, you guys know how we approach this market. New support levels may be presented on the daily time frame as well as the weekly before testing, if that's the case, the 1-2, where many moves tend to terminate at extensions of prior swings. The prior swing, as mentioned many times, was the previous high, 62, to the lows, 4,800. The first one comes with the 1.13, the first challenge. The second one, the 1-2, and of course, ultimately, the 1.618 at 7,139. But again, there is so many stepping stones before reaching those levels. So far, all the data points we have now, currently, presently, are the 1.13. So therefore, is a bubble about to burst. My friends, as new data points emerges in the price action, we're going to be moving accordingly. I hope, once again, that our work here has been presented in an objectively manner, okay? Without pretending, once again, that we pretty much understand every single move in the markets, because nobody does. Everyone, as we move into the new weekly session, let's pay attention to the unemployment rate, also the interest rate. I believe that will be in the second week, also matching the next intersection between price and time for September 16th, mid-September, heading into when? October, the major turning points across the market. Are we going to be higher, lower? I hope I know, but once again, following the data points, we will try to capitalize on the opportunities that the market presents to us. Keep in mind that none of these represent any financial advice, but rather an interpretation of the technical information. Everyone, I'll see you guys on the next one, and I truly hope that all of our work here has been of somehow of a value to you. Okay? In the same manner, thank you for reaching 421 subscribers. We are still a small community. However, we enjoy presenting true arguments in order to capitalize on the opportunities that the market presents to us. Everyone, I'll see you guys on the next one. And remember to live a life with an attitude of gratitude. Cheers.